Personally, I think if I look at, I'll start with payments first, and particularly credit cards. And about 20 years ago, if you wanted to pay, you had to have some sort of a piece of plastic. And today, you need to have your mobile phone. And you need to have you have to have some sort of a payment tool linked to your mobile phone, but that could be directly your bank account. And so digital, virtual forms of payment are on the rise, and to a certain extent, I don't pull out my credit card, my plastic card, nearly as often as I used to. So right off the bat, mobile payments and very definitely on the rise, and dislodging traditional forms. And dislodging them in the way that, if you want, they're still there, but they're in the back of the wallet. They're a utility in the back, as opposed to the things that you have the direct relationship with. And this trend, I think, started off with PayPal, where initially as credit card players, you're not that concerned because they'll still need a credit card to make things work. Yes, but increasingly less so, because your relationship is with PayPal mostly, and then the credit card is a utility in the back. So these are real fundamental threats that credit card companies have to address. In remittances, obviously, if you look at the landscape of remittances, you could argue that Western Union and MoneyGram were disruptors in their own right 25 years ago, which is when companies like Western Union started expanding internationally and really scaling up outside of the US. They were the disruptors. Banks could not offer the service of making money available on the other side of the world in cash, in minutes. This was revolutionary, and because of that, it commanded a certain price premium. And there were objective barriers to building a business like that, which is why this industry historically has been about Western Union, MoneyGram, and much smaller share of the market was commanded by smaller players. With the advent of digital technology, instead, the rules have changed significantly. And now the digital transfer of money from a bank account to another bank account in minutes is a reality. The digital transfer of money from a digital wallet into another digital wallet, or from a digital wallet into cash, are also a reality. The ability to establish cash payout networks is not as unique anymore. So a number of factors have changed whereby this industry is being disrupted, and newer players are coming in with cheaper propositions. But I think the fundamental disruption yet to come is actually then the convergence between the digital movement of money cross-border, the digital storage of money, and what the money is used for. And I think that my personal opinion is that remittances are going to be much more turning into financial wellness proposition for receivers, whereby you're not just sending the money, you're potentially sending services that the sender will purchase abroad for the receiver that's at home, and therefore nurturing that relationship and helping the receiver with better ability to manage the money, better financial education, and a more responsible way that the money is being spent. So I think that there's still a lot of innovation. Back home here, I see that Revolut has started off with multi-currency wallets, and TransferWise started off more with the remittance piece, but now TransferWise has added the multi-currency wallets. So this convergence between sending and holding money, and also I think with payments, and particularly merchant payments. And that's why ultimately the world of banking of tomorrow is shifting onto these digital wallets. And I think what we'll see is the traditional banking propositions, where you had your credit card, when you had the ability to send money and to store money and to invest your money, is going to transfer itself onto these digital wallets.